Thank you very much for joining us here on the Market Day Report on RFDTV and Rural Radio 147 on Sirius XM and the Sirius XM app. I'm John Jenkinson. Joining me now is Rich Nelson. He is with Allendale Incorporated. Rich, we had some export numbers hit the market here this morning. No real surprise. China is back in the market now that they are off of their holiday. A pretty good sale of soybeans. Is that the impetus behind these soybean prices taking off today?
You know, we did see some early strength here today. We saw some, in fact, 5 to 7 cent higher trade earlier this morning. Based on that 131,000 tons of U.S. soybeans sold to China. Good news there. I think in the trade's mindset, it's a good welcome to see China back from their, what they call their Golden Week holiday period. I got to say, though, I wonder if this market maybe is a little disappointed that it wasn't something much larger. I think at this point, many people had wondered if they'd had some pent-up demand and hope to see some bigger numbers. In the big picture, though, maybe it's still lined up here in the next couple of days as far as these potential big sales in front of us here.
You know, Rich, you bring up a good point. If you step back and you look at the big picture and you'd look at export sales, USDA over the last several years has always gone about 3 to 4% above estimating, and then they've always kind of stepped outside of the box. They've been a little bit short each time. We've exported more than what USDA was expecting. This time around, USDA was a little more conservative, according to some, and we just have not exceeded those big numbers that we have in the past. Could that be a little bit of a disappointment?
I think given, like you mentioned here, USDA has a very aggressive starting point for this year's U.S. soybean numbers. In fact, a brand new record among any previous years. So I think, you know, the fact that we are still trailing behind the pace needed to hit this aggressive one. And like you mentioned, though, historically, we know that USDA generally undercounts how aggressive demand is for soybeans. I think overall we're kind of balancing out, playing a little balancing act this year. We know that the numbers are going to be missing USDA for several more weeks, but in the big picture, we're more or less still hoping that they will come to fruition here.
Well, when you look at the grain export inspections that were out just about 45 minutes ago or so, we see that corn, sorghum, soybeans, and I want to talk about soybeans in particular. This week, 1.48 million. Last week, 897,000 and some change. So we're still doing relatively well, but we still have a little ways to catch up to be able to meet USDA's expectations and to keep this market current.
I think that's definitely a great discussion point right there by itself. As a reminder here for us, we have both sales, which are obviously committed for future delivery, and then shipments, which we're discussing right here, which was moved out here last week. As far as what we have sold, but we haven't shipped yet, these unshipped numbers, 707 million bushels at this point. That's actually a bit under the normal 836 million bushels by this point. So at this point, I've got to say we're actually doing very, very well in shipping out what we have sold so far. So on this end, we're being aggressive with these. We just want to see some more sales on the books total.
Okay, let's look at the futures numbers here real quick and get everyone up to date. We start with the corn futures, and right now we're down a half, 349 on the nearby December. July down 3/4 at 379 for corn. You go on over to the soybean market, which Rich and I were talking about. Right now, November soybeans up 3/4, 967.5. May up 1, 996 3/4. You go to the wheat market in Chicago, we are unchanged on the nearby, 436. That new crop down a half, 483 1/4. Kansas City July wheat is now up 1.5 at 482 1/2. July Minneapolis wheat is 647. That is unchanged. And you go to the December cotton, and right now we are 29 higher. 68.71. Stay tuned because Rich and I'll be back. We're going to discuss the livestock trade. That's straight ahead here on the Market Day Report. Rich Nelson rejoins us now with Allendale Incorporated, McHenry, Illinois. Well, I tell you what, Rich, last week there was a lot of optimism in the protein complex. Where did all that optimism go to?
Well, it looks like it's still in the complex, but certainly favored on the beef side of things here right now. Pork obviously having a little mixed to higher trade here, but this cattle market certainly seeing some fire here today. Brand new highs, I should say, not highs, but I should say brand new highs for some of those 2018 contracts. And here with this December pushing above the resistance from the September 22nd peak. So no doubt it is there, but certainly favored on the B side right now.
October live cattle up $1.58, 113 even. December fats up $1.26 at 118.18. You go all the way out to April and June, we're 99 higher at 122.57 on the April-June trading at 116.05. That's up 63. Those are the deferreds Rich was talking about. You go over to the feeder cattle market. We'll take a look here, and October is up 50 at 154.28. November feeder cattle up 72 at 156.22. April feeder cattle up 70 at 151.98. The key to probably all of this, Rich, is we push through those highs, but then we have to close at that level also, or else, right?
Certainly true. And with our discussion on the B side here, we've got some lower advertised show lists at least. Most likely there are a few extra cattle than last week, but these are advertised numbers here. And still hopes that we've got the cash cattle low in for the year. And I think all these traders are realizing or maybe hoping that this is going to be a situation like last year, where after we put in the fall low, we had a $20 rally between the fall low and the end of the year. So maybe that's a little aggressive expectation, but that discussion is certainly out there right now.
Also for discussion, a couple of items. The cutouts have been a little bit stronger, the box beef, and we're also keeping our weights under check.
Certainly true. Last Thursday's numbers for weights were a bit lower than the trade expected here. Also on the end user discussion, we can't forget that end users had, really up until actually yesterday's comprehensive box beef report, they've been very aggressive in buying for this extended delivery, all trying to guess about this fall low discussion as well here too.
All right, let's move on over to the hogs and check out what's going on with the futures here. First, I want to get your thoughts here. October lean hogs up $1.07, 60.10. December up 85 at 61.80. February hogs up 80 at 67.62. You know, hogs started out the beginning of the month with a big burst of energy. Then they pulled back a little bit. Is this energy reoccurring now?
I think with yesterday's 93-cent gain for wholesale pork, another jump on this morning's wholesale pork report. I think in this case we're hoping where you got some futuring going on and now being realized in this market. In the big picture, though, unlike cattle, where you can maybe have some arguments that the peak supply is right around this level, if not maybe a week or two past. On the hog side, we still have our problems with the peak week of production, still weeks in front of us here. That won't be seen until November, though.
Excellent point. Rich Nelson here with us. Rich, thank you very much. Rich Nelson with Allendale Incorporated. Before we take off, let's check that Dow. Everybody's watching this very, very closely after setting highs yesterday, setting highs again today. Right now, the Dow Jones Industrial Average up 30 points at 22,791. And so we'll continue to keep a sharp eye on that, Mark.
Absolutely. Thank you, Rich. Yeah, after setting an all-time high early this morning, 22,850 is the new number to watch here. Yes, so we'll keep an eye on that. Thanks, John.